Hi, everyone. Thank you for being here for our first Young Investor Society Fireside Chat of the year. We're super excited to bring to you Morgaine Conway-Grim, as well as Liz Sue, who are going to be speaking to you guys tonight and answering all of your guys' questions. So without further ado, let's go ahead and get started. With Morgaine Conway-Grim. Morgaine is the CEO and founder of Hawks and Doves, which is an investment education company that works with all types of organizations to equip teams and give them knowledge about finance and investing. So Morgaine, go ahead and take it away.
Hi, good evening from London, everybody. It's wonderful to see you all here today. I'd like to kick off and just say thank you so much to YAS for having me here. Financial literacy, I mean, as I felt in my youth and still even now, I think it's one of the most important things for all of us to be able to navigate our lives, whether we go ahead and work in finance or not. So it's a real sort of pleasure to be here today. And I hope that I see some of you, if not all of you, at the stock pitch competition in May next year. So look, maybe I can kick off just with my story, where I grew up and where I came from, and then, excuse me, we'll kick into my career. So I was born in the UK. My mother is Dutch and my father is English. And I grew up in a tiny little countryside village in the southeast of England. And finance and the world of sort of banking just did not exist back there. It was very much just, lots of animals and horses and going to school and after-school activities, but nothing really to do with the world of banking. But over the years, I became more and more interested and learnt that there was this whole other world out there. And that, for example, when I walked past the grocery store, actually, you could not only just go into the store to buy the groceries, but you could actually buy the grocery store if that grocery store was then listed on the stock exchange. For example, a company like Walmart. So long story short, I became really interested in finance. And so over the years, I started to try and get internships. I didn't know anybody who works in finance, and nor did my parents. But I actually ended up writing letters to different organizations and said, can I just spend a week with you and I'll do it for free. I just want to get some experience. And fast forward, after college, I then I got a job in my first proper finance institution. And that job was actually as a receptionist. So I took a chance at just trying to get into the door somehow. And 1 week into that job as a receptionist, I put my hands up and said, hey, is there another job that I could do here? And I got lucky. And one of the things in life that you have to have a lot of hard work, skill, and sometimes you have to have luck. And I certainly got luck then. And what's happened in the next few years is that I started to learn about finance. I began to trade. I took my exams. I eventually became an investment analyst. And a few years after that, I then went on to work at JP Morgan. At JP Morgan, I worked within the private bank. So what they do there is that they look after the investments for ultra high net worth clients, as they call it. So these are people that have more than $25 million in assets. And I was an investment advisor there, which was an extraordinary privilege to be able to advise my former clients on their investments and their portfolios, working with the teams there. And it was at JP Morgan that I became really passionate about educating my former clients sometimes about the markets in general. This may be some of my younger clients, maybe the sons and daughters of my former clients, or sometimes the clients themselves. Moving on, I then joined GQG Partners. So GQG Partners is an equity, long-only equity asset manager. So what that means is that they go ahead and buy equities. They don't short them and try and sort of play it the other way. They're just long-only. And there I was in a relationship role. And I promise I'm coming to the founding of my company soon, because it's 10 years in finance. I'm trying to summarize in a few minutes. But at GQG, I actually sort of developed this interest and passion of educating. I was lucky enough to be able to lead a training program for the incoming associates into the firm. So these were people who had a few years experience in the industry, and they were rotating around roles that were non-investment facing and non-client facing. And so I was given the opportunity to educate them on what I like to call the fundamentals of finance. So this could be anything from how do central banks work? Why are interest rates so important? What macroeconomic data do we care about as in the financial world? And then simple things such as what are equities, what are bonds, and then how to understand the asset management industry as a whole. How does this particular firm fit into the entire industry? One stat for you: the asset management industry is worth over $110 trillion. I believe it's at around about $120 trillion, trillion with a T. So it's absolutely enormous. And so bringing it to the present day, and also a little story about why I'm even here today and how I came to find YAS. And this is one thing that I would encourage you all to sort of take away with you as well, is the power of relationships and just forging long relationships with everyone that you work with. Whether you think that person is a senior person or that's a junior person, relationships are really what can drive you forward. And relationships is what brought me to YAS. I had made a decision to resign from GQG Partners, and they were incredibly supportive. And I went around and spoke to everybody that I was a colleague of at the time and said, oh, look, I'm doing this new thing, and I just wanted to let you know, and received lots of support. And one of those people I spoke to is a lady who was and has been and still is involved with YAS. And she said, wow, you seem really passionate about this idea of, leveling the playing field of access to knowledge. You should speak to the Young Investor Society. And so this culminated in me actually on the last day of my corporate career, which was earlier this year. I actually was able to be at the YAS Summit in New York City, which was absolutely wonderful. So that is a very quick whistle-stop tour of my career, but I'd like to spend a few more moments just on my company now, and what the purpose is. So I founded Hawks and Doves. And now Hawks and Doves is actually jargon, hawkish and dovish, are pieces of jargon used to explain what people think central bankers are going to do, whether that be the Federal Reserve or the European Central Bank. And hawkish means that they think interest rates are going to go up, and dovish means the opposite. They think interest rates are going to come down. And I founded this company because I've experienced myself, how alienating jargon can be and how opaque the industry can be. And I found it very sort of stressful when I was a receptionist and when I was starting out my career, and even, many years thereon, is there was so much jargon, and it's like a completely different language. And it was one that I had not grown up with. I did not feel equipped to understand. And guess what? I worked really, really hard, and I was in the industry, and I had the privilege of having incredible mentors and teachers. But I know I was lucky, and there are so many people who aren't in the industry having to understand those things. And I think that a lot of what we talk about is actually really important. It's important to understand where interest rates are going, what inflation is. That impacts every single one of us in the entire world, because it means how much can we borrow at what price, and how much is the stuff we're buying costing? And then many, many other things. So I founded Hawks and Doves to level the playing field of access to this knowledge. And I do so in a couple of different ways presently. Number one, I go into asset management firms. I've just come back from 4 weeks in New York City working for my first big client, training their incoming associate class. And I also go into other types of institutions to teach about how does this all work and just the basics. So with all of that said, I guess I'll pause there, but I just would love to answer any questions. There's been many, many challenges that I've had over my career, especially, being a woman in finance, trying to break in a very non-traditional way. I did not have the classic route into finance. So I'd love to begin a conversation, but that's all about me for now.
Perfect. Thanks so much, Morgan. I actually have a few students who are going to ask you questions. I just want to remind students, if you can be on camera, that's amazing. Make sure you unmute yourself. And then Christiana Sung is actually going to go first. If you can, Christiana, if you can just tell us what school you go to and what state you're in before your question, that would be amazing.
Yeah, I go to Mount Everest Academy in California. And before I ask my question, I just wanted to say thank you so much for taking the time to speak to us. I'm sure we all really appreciate this opportunity. And so my question is, if you could give some advice to maybe your younger self, maybe a few years in the past, or maybe just someone in a similar position as yours, what would that advice be? And do you think it would have benefited you to have started off with a clearer direction, knowing exactly where you wanted to be? Or did you enjoy more that process of self-discovery throughout your years of experience?
I love these questions. Thank you. Thank you so much for those. I think to take your first question, I think probably there's two pieces of advice that I'd give to myself, my younger self, as it were. It would be to firstly to have confidence, right? I think that's something that I've certainly, struggled with and still do struggle with. I think a lot of people do. And to have confidence, and I think, how do you build confidence then? What's the answer to that? There's many different ways. I think one that has really worked for me is ensuring that I'm highly skilled or technical when I'm saying something, right? So if I'm going to go in and speak about a certain concept, if I'm really, really sure that I know that well, guess what? I'm probably going to be more confident when I go ahead and talk about that. Another two things that I have found really increase and improve confidence is getting very constructive feedback, meaning you want somebody to say, look, that was actually quite terrible, right? that didn't work. These are the things that didn't work. And I'm going to tell you them kindly. It's a kindness to be able to give constructive, clear criticism to somebody. So then you can say, okay, you know what? Yeah, I really need to adjust that, or I need to stop doing that, full stop, or I need to start doing something else. And I'm really grateful for having had a lot of that constructive feedback. And I guess kind of weaving into that quite well is the people you surround yourself with and the people that you sort of learn from. That is, if I could give one piece of advice, like, be really careful and intentional with who you learn from, who you surround yourself with. That can have an enormous impact. If you are around people who are wanting you to succeed and truly adopting that and truly being intentional with that, that will be absolutely phenomenal. And I've been lucky enough to have that a lot. There's also been times there when I haven't had that, right? And I've seen that impact both ways. So I would say the confidence is a really big thing, and work really hard. Work really hard. Like, if you can develop a skill, I would, if you can, sorry, how do I say it? If you can develop a skill and become really good at that thing and then build upon it and build upon it and build upon it, that's going to serve you well. And there's absolutely no substitute for hard work. It's one of the most important things. And I guess the third thing is work out a lot. That working out is one of the best things. Keep your body healthy. And so maybe I'll answer your second question, because I think what you were sort of asking is, you know, did I sort of choose the directionality, or was it sort of more like seeing the ride? Is that how I understood it? Yes. Okay, cool. So when I was very young, I was 11 years old, I said, okay, I'm going to work in finance, and then at some point I'm going to quit and start my own company. So I always knew I wanted to work in finance. I always knew that, and I mean, for me, it was really trying to understand how the world works. I think that when you work in finance, there is, of course, there's a lot about the world that we don't understand, but there is quite a good amount that you can understand through working in the industry. And so, but so that's a pretty broad, big thing. I want to work in finance and I want to have my own company. How you get there is really the ride. And I never expected to have had the ride that I have had. And I would encourage all of you that, careers are not linear. There are lots of people who will go to one place and be there for a really long time. There are also lots of people that will change things, that will adjust along the way. And you really have to, it's a mixture of timing and luck and hard work. And I would say that I'm very grateful for the ride I've had because it's brought me to where I am today. And I know that sounds incredibly cliche, but cliches are often there for a reason, because there's been so many things I've learned along the way that I think have allowed me to have the skill set that I need to succeed today. So I don't know if that answers your question.
It does. Thank you so much.
Of course.
Perfect.
Some questions.
All right, Morgan, I have Isaac Chan, who has a question for you.
Yeah, I just wanted to introduce myself as well. I'm from Edison Academy. I'm in 11th grade. But before I ask my question, I did also just want to mention like the perfect timing of hawks and doves, especially as like the Fed just lowered interest rates today. But yeah, onto my question. I know you said that you led a training program for incoming associates at GQG. So my question was like, what aspects of leadership did you need to rethink when like transitioning from leading in from investment boutiques like JP Morgan and GQG into leading your own company?
Oh, that's a really good question. I think for me, I'd never been, I'm only 10 years in, right? So I'm not that senior. I have a certain level of seniority, but I was a director at GQG. I was a vice president at JP Morgan. I'm not that senior by any means. And I certainly was never placed in a formal leadership role before. So I have had to learn that skill set by myself. And it's been, I think with starting my own business, there's been, I guess I'll share a couple of sort of like takeaways. I think the first one is that you don't have the infrastructure of a corporation around you. So one example, when I was building my website with my amazing guy who did my branding and design, and I then thought, oh gosh, I need to have terms and conditions, and I need to have cookie policies and all of these necessary things. And I just had no idea where to start. I was like, oh my goodness, do I pay a lawyer like lots and lots of money, or do I do this thing? And eventually I figured it out. But the process of figuring that out was actually quite hard for me. It was because I just had not done that before. It was not in my skill set. So I've had to develop a lot more, I guess, self-reliance. I've also, now that I'm presenting more, I also have to develop, as you say, that leadership, right? Like I know that when I'm standing talking to people who have just graduated from college or whoever it may be, they're listening to me and they're trusting what I say. And that comes with a huge amount of responsibility. And I would say, to be honest, everything in finance, we have enormous fiduciary responsibility. And it's really a privilege to be able to be in that industry, to have that responsibility. But I'd say that, yeah, I've definitely had to develop, that self-reliance, no corporate infrastructure around me. It's a lonely thing as well. It's a lonely thing to do. If you're used to having colleagues around you, it's like if you're used to being at school all day and then suddenly you're not with any of your classmates anymore, and it's just like you on your own. It's quite a change, right? So there's been lots of lessons there, but I would say, yeah, self-reliance, and then just really trying to take the responsibility that I know I'm entrusted with like very seriously, and try and be, as I guess like with as much integrity and with my knowledge. So yeah, does that answer your question?
Yeah, thank you so much.
Of course, great question.
Perfect. Thanks, Isaac. If anyone has any questions for Morgan, you can either raise your hand or type it in the chat. And we'll give you guys a minute or so to either raise your hand or type it in the chat. Don't be shy. Morgan loves to answer all of your questions. Looking for hands. I have.
Oh, James has a question.
Oh, James does have a question. James, you can unmute yourself and ask your question.
All right. Yeah, Morgan, you're an expert now in teaching about financial topics to those who are in the asset management industry. So I'm just curious, what are the topics that you teach that most
Mhm.
people don't know about? That's a topic that is maybe a gap, or most people don't know when you teach it.
I love this question. I could probably speak for hours about this. I would say there's two answers to this. The first answer is one of the most consistent piece of feedback of, oh, that was really useful, is the importance of interest rates. And so people know about interest rates generally, but quite how important interest rates are and quite how deeply central banks impact the overall financial system, I think, is something that people find the most useful. I would say that the topic that is the least known about is fixed income. Fixed income is a asset class which is not as intuitive as equities. Equities, you just buy something. Fixed income, you're lending a company money, but the way in which you value fixed income, the way that fixed income moves around, much less intuitive. And I would say that's the topic that is the least understood so far in my experience.
Sounds like we need to teach more fixed income in Young Investor Society.
Yeah, sounds like,
Well, I prefer equities.
sounds like a
Let's
new
stick with
curriculum
equities.
coming soon. Thanks, Morgan. Morgan, Brody has a question, and he says, what would you recommend in terms of networking? Like if you were to give advice on like how to network, what does that look like?
Yeah, I would say, as I mentioned earlier, it's all about relationships. I think that's a huge thing. Networking, how to do it. I mean, anybody. I mentioned sending letters when I was really young. Right now, it could be, the modern day equivalent of that is LinkedIn, right? If there's any type of organization that you could sign up to, make the ask. I mean, have a chat with me. I'd be more than happy to have a chat with you. Use whatever availability you have to you to build a network. And remember that when you're networking, it's really important there's sometimes when you'll make an ask like, oh, can you help me get an internship here? Or can you help me do this? Other times it's just really about getting to know that person and understanding what are they doing? What are they trying to do? How can you learn from them? I would say that's a great question to ask people is, hi, like, thank you for taking the time. I'd love to learn from you. So yeah, I don't know if that answers your question, but I would just say like broad, and don't be afraid. Don't be afraid if someone says no. They might say no, but more often than not, I'll probably say yes. So
yeah, so Morgan, I'm going to take this opportunity to let all of our students know that our LinkedIn page on LinkedIn is more than happy to link in with them. We have all of our board members on there. We have many YIS alumni who are in the investment field. So that's a perfect place to get started. If you're not already on our LinkedIn, please join us. Perfect. So it looks like I don't have any more questions in the chat, Morgan, but I'm going to also at the end see if anyone has anything to ask, but I'm going to move on to Liz. But thank you, Morgan, for everything. That was amazing. And I love the way that you included some of the challenges, that it wasn't just an easy breezy trip to where you are, and that you didn't have, any family or anyone in the industry to kind of help you along. So I love that you were able to overcome.
thank you for having me.
Yeah, no problems. Liz, thanks for joining us, Liz.
Yeah.
Liz is the lead portfolio manager at Boston Commons Emerging Market Strategies. And also, Liz and Morgan are Young Investor Society board members. So lovely to have them on today. So go ahead, Liz. It's all yours.
Great, thank you. First of all, I want to really say you are taking initiatives, try to understanding the business, carve out a piece of time during your very busy curriculum. I have a 16-year-old son, and I know how much balls you guys are juggling. I cannot say I want to repeat that or I want to be in your shoe, but really just you should feel good that you are taking the initiatives and carve out time, taking some like figure things out. So really you are ahead of the game. So, and also really lovely to hear Morgan's story. And I actually didn't know that's the company that you started. And I have to say it is financial industry. It is now you're talking about it. It is full of jargons. Just recently this morning, so I'm a big fan of podcasts. So for anyone, I'm a big fan of podcasts, and I just learned this morning a jargon that after being this industry with a little bit of gray hair, I still don't know, and I'm gonna throw it out. And anyone just take a guess. You can, put it into the chat and see if you know about it. And the term is called boil the ocean in the financial industry, and it means it represents certain things. So it's not interest rate, nothing that complicated. It's just something fun. So okay, I'll kind of follow Morgaine's sort of way, and I'll start by giving a sense of how I grew up and my education background, and then a little bit about my career. So I actually grew up in China, so English is not my native language. I know nothing. Well, I majored in finance, but I really did not know what I wanted to do. I didn't know nothing about stock market, bonds, nothing. And I came to the US in 1998. That's probably before many of you were born. So I got this country with $600 in my pocket. That's the entire life saving of my parents. And I'm forever grateful to Tufts University, who gave me a full scholarship. Otherwise, I wouldn't be where I am today. So basically, I came with a little bit of money and a scholarship, and I studied econ at Tufts. And then after that, I, again, very lucky, I find a job in consulting, and it's actually economic consulting with a firm called Analysis Group. And it's a wonderful, wonderful firm and has grown tremendously since I joined in 2000 to be exact. So anyone who wants some information about it, it's actually a great starting point. Again, it's called Analysis Group. It's an economic consulting firm. Okay. So I worked there for 5 years. And consulting, as you can see, you would be working hard. And I'm happy to talk to anyone about consulting as a career option. And there, I really did all kinds of knowing a lot of different industry, pharmaceutical, manufacturing, all kinds of industry. And I kind of feel like, okay, I like companies, right? I like to figure out their strategy. I did some, helping them with the marketing. There's just so many aspects of a company, and I just found it fascinating. And then I felt like I had some extra time, and this is I'm joking because being a consultant it's a full-time job, but I actually figured, I want to actually pick up a CFA. So I actually got my CFA in that 5 years. All this to say, actually, sort of a second Morgaine's point that you do want to work hard when you just fresh out of school and just learn, do things, right? And then after 5 years in consulting, I decided to pursue an MBA. Again, after CFA, I think I learned how to do fixed income and all the technical stuff, but my sort of experience from a consulting, you can say industry experience combined with my CFA, actually made me feel like I want a bit more. I don't know what I wanted more, to be frank. I just feel like I wanted to see more doors open for myself. That's why I applied for MBA, and I went to MIT Sloan for my MBA. And MIT is, some of you may think of it as very technical, but the Sloan MBA program is actually, it's full of energy and full of people with very, very different ideas, very, very different background. But one thing I would say, if we have to draw something that's in common, is that this desire to kind of start your own company or start something. And So that's, I would say, and again, I'm happy to talk to any of you about MBA, which I know you're not thinking about right now. I wouldn't recommend you think about right now, but that's not something else I can speak to if you have interest. So after MBA, I kind of knew that, I want to do asset management. So now let me move into my career part of it. And I just knew that I want to do asset management because it's meritocracy, because it's I can kind of after being a consultant, I know that I really want to kind of think about strategy and think about company, knowing how a business works. So, but I will be frank that it is not that easy to find a job in asset management segment within finance, right? So finance is a big, very big area, and there's so many area that you can go into. Again, I'm happy to answer those questions. But within asset management, which is investing, right? So I also I didn't quite know, do I want to do fixed income? Do I want to do equity? And so I just, I just apply for all the positions I can apply to, basically. So the takeaway, if you may, is that you don't have to figure out exactly what you want to do when you start it. With a big direction, just go for it, right? So I started with actually a fixed income shop called Standish Mellon. It's a big part. It's actually part of Mellon. I only stayed there for 9 months. I just after 9 months, like I very quickly I figured out I didn't want like fixed income. I wanted to look at companies, and then and speaking of mentoring relationship, it's really people that I know just tap on my shoulder and say, hey, we're starting a global equity fund. Do you want to come along? So I came along. So I started with global equity in 2007. So again, I graduated from Sloan in 2006, right? So you can say I moved along a little bit, had no idea what I was doing, basically. So I came along to kind of with Battery March, there's another firm, but within Battery March, kind of starting the global equity strategy. So if you hear my career path, you will find that I kind of have this startup mentality, even though I never started a firm like Morgaine. Okay, so that just tells you that. So anyway, let me go back to my career path first. So after I left the fixed income, I joined Battery March, who started a global equity strategy, and then worked hard and so on and so forth. And then another colleague within Battery March tapped on my shoulder and said, hey, you seems like know something about Chinese. Maybe just come along and help us to build another, at the time was Asia hedge fund 130/30 at the time. Many of you may not even never heard about it, but essentially there's another strategy that they need to start up, and they tap on my shoulder. So I came over to the emerging market side of the business. So this is Battery March. I was doing emerging market investment, started as a South Korea, I should say, analysts, just looking at Korea, Taiwan, and then Asia. And then in 2013, this is probably after, let's just call it 7-8 years. Actually, there are some corporate action. For those who doesn't know, there's a merger acquisition happened that someone else bought Battery March, the firm that I was working with. At the time, I had the options I have several options, and this is where there's the at the time, I actually started to looking at my current firm, and which is a sustainability ESG emerging market fund with 0 assets, right? So it was, you can think about it, it's very risky. And I had another position to work for a more established, very similar to my Battery March role, with 40% higher pay, but similar to what I've done, what I should say, what I did at Battery March. Or I can continue with some of the other things. It was a, so that was I can remember was kind of difficult decision for me, and figure out, and then obviously it's pay, right? The financial aspect of it. But I decided to join my current firm, called Boston Common in 2014. So after Battery March essentially went away, got bought. So Boston Common, my current firm, is a woman-led, majority employee-owned sustainability or ESG global equity manager. So Morgaine touched on a little bit about equity, long only, right? So we are that, like, investing companies. And then I was so glad that James, in the stock pitch last year, there's a requirement for incorporating ESG analysis, right? So some of you, if you were in that competition, you may have heard about that term, but really is to investing through the lens, or thinking about the corporate governance, thinking about some of the aspects that's environmental, human capital, all those things in a holistic way to benefit not just shareholder, but also all the stakeholder. And the belief is that by doing that, benefiting all the stakeholder, it will create value, right? So that's Boston Common. Let me start with that. That's my current firm. And then I decided to join, in 2014 with my current firm. So now 10 years now, was really that at the time, our firm, the EM strategy was 0, but we had a, seed money, meaning our founder started a little bit putting their own money to start this strategy. And at the time, I remember vividly, 2014, I went to some cocktail, and it was like, I'm thinking about this opportunity doing ESG emerging market. People going, what? ESG what? There's no one was talking about ESG, and not to mention ESG emerging market, right? It was kind of crazy. But I somehow, and it's also crazy for me that I actually didn't know anything about ESG or sustainability. But I think, if you want to say, address the climate issue, if you want to, give people access to finance, give people healthcare, what's better way to do emerging market and give the education access to kids in Indonesia, for example, right? Water to Latin America. So I just felt like that kind of makes sense to me. I had no idea what that is, and then I jumped in with that opportunity. So I'm gonna try to wrap up a little bit. 10 years forward, now we kind of build the strategy to a certain size, and we are actually have very strong performance, and I thoroughly enjoy what I'm doing. People sometimes at my age now, you probably won't think about it. Some people start saying, oh, retirement. I say, what retirement? I'm gonna keep doing this. I mean, it's the same lifestyle that I'm gonna have. So travel to different emerging, different countries, I should say, maybe not emerging, talking to companies and figure out how we can use capital. And I want to use that's finance, to bridge the gap and make the world just a little bit better place than when we started, when I joined this world, not when I was born. So I'll stop, and then happy to answer any questions. And
Liz,
anyone
Liz, thank you for sharing. I love the part of your story where sometimes there just isn't a plan and you just kind of pivot to whatever kind of comes up, and sometimes it works out and sometimes it doesn't. But luckily you're here with us. You have an amazing career and it obviously worked out. And I love that you incorporate ESG. Many of our students do know environmental social governance. We do have it in our curriculum as a standalone lesson, and we do require it to be addressed in our stock pitch competition. So thanks for bringing that up. I do have a question from one of our students who's currently driving, so he can't be on camera, but he wants to know what experiences or skills from your college years do you feel were most influential in shaping your career path? And how did they prepare you for the challenges that you faced in finance?
Yeah, that's a great question. And then I probably have to pivot a little bit just because I actually did my college in China. So what I learned there may not directly be applicable to you. But one thing I also, you want to learn, I think similar to what Morgan has said, if you know what you want to do during college and figure out what your major, etc., definitely like work hard and get your technical skills down. I think that will build your confidence and you can do a lot with it. So I would say that's the college skill set. But if you want to be in investing, I would also recommend you do something in college. This is actually completely outside of finance. It can be history. Like I'm not saying major, minor, and that you can decide. Different school has different tracks, and I'm learning that right now with my son. So, I'm more saying like if you want to do finance, econ, learn something about philosophy, learn something about history or chemistry. Like they are totally different. You can still major in finance, but that will widen your horizon. And by widen your horizon, I'm more talking about your ability to think. This is, I'm going to use an analogy, I may or may not be appropriate, is like your diet, right? So if you, and this may be not politically correct, like if you only eat one type of food, like tomato, I'm saying, or only rice, and that actually there's a scientific study to show that that's not good for your brain development. By eating different kinds of food, it opens your palate, but also open up your brain.
Great advice. I have Alex. Alex, if you wouldn't mind, you can unmute and ask your question to Liz.
Yeah, of course. Hey, I'm Alex. I'm actually a YS alum. I'm a first year here at the University of Virginia now.
Great.
And so I was reading an article the other day about the future of ESG investing, and it kind of touched on like, are the factors holistic and like, do they incorporate like kind of the maximal benefit that they can? And especially with the context of, the recent election of Donald Trump again. So my question is, how do you believe that like Boston Common and the ESG investing framework is going to evolve into the future?
Yeah, no, that's great. Let me answer in two perspectives. One is about the philosophy, and one is about the data or application. From a philosophy perspective, I think if you believe that, if you just want to sort of make short-term return in percentage term, I grade 10% today by owning the stock or next 3 months. That's one way. Then ESG may or may not give you immediately measurable percentage to that number. But if you believe that the purpose of capital, which is what finance is about, is to allocating those capital from where it's most needed and with addressing either the products that's useful for environment and human capital, et cetera, I think it really dives into the, it's very consistent with long-term investing. So I would say it's just a different, it's a different lens of looking at a company in addition to just the profit, the margin, the ROIC, the debt, et cetera, right? So it just gives you what I called uncorrelated information. And I personally do not think that will go away, and it would only strengthen your financial return on a better risk return adjusted. Maybe that sounds a little bit, but risk meaning by looking at ESG, very simple, a better corporate governance company, you may not gain immediately right away, but the chances of that management blow up or take your capital away or it's less, right? So what we tend to say, better risk-adjusted return. And your risk right on in terms of the Trump election, win. But I have to say that, and obviously it's a very let me not go there, but I would say his first term, we actually see increased, let me repeat that, increased interest in what ESG or what at least our company was doing. And in a way, I think you probably are very sort of follow the industry quite well. In 2020 pandemic kind of raised people's awareness, and there's a lot of, in my mind, greenwashing. So there are a lot of company or firms saying do ESG, and I would say dilute some of what actually ESG is about. But my second point about data is that I think you have to constantly evolve with what's measurable, what's the right way to think about ESG. So from that perspective, I think it's constantly evolving.
Great. Thanks so much, Liz. I have one more question from Isaac.
Yeah, hi. Thank you for your insights. Just to preface my question, this summer I actually interned at Ethos Investment Management, as to Mr. Fletcher can confirm, where I also similarly analyzed emerging markets in specifically the Baltic region. However, from my personal experience when researching, I encountered some gaps in the financial and contextual data, especially regarding their competitors and market share. So I just want to ask, in your role in analyzing Asian markets, how do you navigate around these challenges of building a portfolio for your clients?
Yeah, that's a great question. And I think that's probably some of the questions that my clients are asking. So you are really far ahead. So I first of all, my strategy is all emerging markets. So I also look at EMEA, etc. So I think what you are asking is a disclosure, right? So the information that the firm, the emerging market company are disclosing, which it is behind compared with developed market, right? But if you actually do your homework, like for example, when you intern or actually do your work with James, you actually are likely to have a better impact. So what I like to call is roads less traveled. If a company is covered by 20 Wall Street analysts, and they disclose pages sustainability report, the things that you can gain, the edge you can gain may not be that much. This is the part that, and so some of the companies, so the way I want to answer your question is, the data that the EM company actually, the more and more they are doing that, the quantity of disclosure is actually more and more. Maybe Asia is ahead of the game, but for example, in EMEA, South Africa is way ahead of the game. Brazil, way ahead of the game. I would say Brazil is maybe way ahead of the game than the US. So that's just the quantity. But I think what you are getting at is actually really the quality of it, which is they may disclose, but may not be reflective of the management, and that's where you need to do financial analysis.
Thank you.
Perfect. Rithik.
Yeah, hi. Just to introduce myself, I'm Rithik, a sophomore in Montgomery High School down here in New Jersey. So I was wondering if you had any recruiting experience or any insight about that. So what are you guys looking for like in a potential candidate? Is it more about technical analysis? Is it about like their overall personality? You know, if they're in college, is it about grades and like extracurriculars, or what exactly are you guys looking for?
Are you more specific, sort of Boston Common, or you are more thinking about this business, like equity investing in general? I just want
Yeah,
to,
just investing in general, this field.
Yep. Okay. So I will say in terms of, and every firm will have a different sort of criteria. I want to say in bigger shop, may have more sort of checklist that you need to follow, right?
Yeah.
So for me, I would say you want to be first and number one thing. I would say you really, really have to love this job.
Mhm.
You really, really have to love analyzing a company, because this is a job that is 24/7. There's no, it is, you are constantly thinking, reading, absorbing. So if you think that, okay, I want to just, after 5, I want to think nothing about that, this might not be for you. So I want to see someone who is really passionate about doing this. And by that, I mean, everyone will say they're passionate, right? But if someone actually have done something, I don't care whether it's, Yahoo paper portfolio or anything that it's not about you earned. I care less so about you earned, I don't know, $10,000 or $1,000 last year, or your return is 100%, and tell me that. I care less about that, but I do care about like you, at least you tried, and you are thinking about company. So that's one. But a lot of it is you yourself. Like you need to figure out this is a job for you. You're getting, and if you don't like it, you will suffer. So it's right. So technical skill wise, I think I think you guys are, you know, you will be well prepared. I would say in college, right? So all the finance, econ, macro, but I mentioned the actually some of non-traded, philosophy, those kind of things. I actually think can be quite interesting. CFA is a good thing. Maybe right now it's too early. I maybe James, correct me if I'm speaking too, but I think just those basic, learn what, Morgaine makes summer program, YAS. And, if you actually study those program, those terms, those technical skill will get you very far. And that's when interview, it's just so that we know that you have some basic knowledge about the market and you're interested.
All right, thank you.
And I may
Perfect.
just putting a plug, I think participating in the global stock competition, just be going through it. You might not, right? The first year, just go through it. And even by that, I think you will way ahead of the game. And as a matter of fact, I pitched to my company that we are working with James that and Isaac did that, right? You've gone through that. We know that you will have basic skill, like you can do the job. Quite frankly, I mean, it's not about whether you pick the right stock. You can do the job, right? And we are happy to offer internship to folks or students that gone through the competition and win, or just showing that initiatives.
Yeah, Boston Common's been great. 2 of our students that were the top finalists in our global stock pitch competition went on to have an internship at Boston Common. Liz was gracious enough to be able to extend that invitation to us, and we're crossing our fingers, Liz, again for next year.
Yep.
Perfect. Neil has a question.
Yeah, so my name's Neil. I'm a junior at Coxmill High School in North Carolina. And this question is a little bit off topic to what we've been talking about so far, but I was wondering, based on your experience with when you did your MBA, what would you recommend about the importance of doing an MBA, and what are some things that we should think about before doing it?
So the importance of MBA, I would say, personally, I gain less in terms of technical skills, just because I did my CFA, right? But for me, who at the time I thought I had less knowledge about the corporate, sort of on the business side. That helped me. So I actually took a lot of marketing courses, entrepreneurship. My favorite, system dynamics. So I feel like I'm stressing like the things that you are not, like a little bit out of your comfort zone. And then build you will have, very interesting people that you can talk to and talk to them. And they might be your business partners down the road.
Yeah,
Great.
that makes a
Yeah.
lot of sense.
All right, if you have any other questions for Liz or Morgan, please raise your hand or put it in the chat. I'm going to, we have Manu. It looks like you have your hand up. We'll go ahead and have Manu answer or ask his question. And then we'll do a wrap up where we're going to ask both Morgan and Liz to come up with just a bit of advice to tell our students about either investing in general or education, or just one piece of advice you'd give them, knowing that they're high school students and they're interested in finance and investing. Manu.
Yeah, I just have a hi. My name's Manu. I go to St. John's Prep in Massachusetts, in Danvers, and I just had a quick question about ESG and social impact investing in general. So I was just kind of like wondering how you go about like balancing financial growth with like environmental and like social responsibilities, because like a lot of times with bigger firms, these things can kind of be at odds. So I'm just kind of like wondering how at Boston Common you guys kind of balance those two factors.
Yeah, so that can be a lot we can, talk about. That's pretty much my professional life, right? So it may not do its justice in a few minutes, and I'd be happy to actually set up a time with you and give you more details. But basically, I think similar to what I think what you're asking is some of the big shops are pulling away from this. Is that what you're asking? Yeah, so I think this is what I meant by some of this it's I don't want to say, it's common that when something is growing, you will have ups and downs. It's like a tides, and there will be up and down. But I believe that the resources wise, if you can earn return, I think it will speak for itself in terms of the so anyone would want something, your capital doing the right thing with the same return, right? So it's more in terms of your investment philosophy, your process, the people. I think those are and investing for the longer term. I do want to differentiate between short-term day trading versus long-term investment. Probably James and I share similar sort of philosophy in terms of what we're looking for. And I think you should read a lot of investment books. Maybe I'm jumping ahead and I'll give it to Morgan in terms of my advice. Read books. Read at this age.
Perfect. Thanks so much, Liz. Morgan, one piece of advice for our students.
Liz, you took it from me. I was going to say this as well. So look, one piece of advice, just in life in general, I would say that having diversity in all the things that you do and focus your attention on is really important. So this is going to be a few pieces of advice in one. But as I said earlier, work out, eat well, like take care of yourself. This is really, 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 really obviously the most important thing. Don't make work your entire identity. Do try to find other avenues, especially really early in your career. You're going to want to just go so hard, and that's fantastic. And you should throw yourself into it, but do take the time to look after yourself and take the time to make sure that you are reading philosophy and history. I love, Liz, what you were saying earlier, and I'm a history major, so I couldn't agree with you more. So work hard, don't make your entire identity work. And number one piece of advice, just do look after yourself. It's a lot starting your career, and I know that if you're all here today, you're all going to absolutely throw yourselves into your careers, and just remember to look after yourselves.
Perfect. Thank you so much. I'm actually going to hand it over to James just because I know James has a few books off of the top of his head that he can just throw out to you and give you guys some, general reading for your list. So James, do you have any books that you would recommend for
Well,
our kids?
I was gonna thank them, but yeah, I mean books. One Up on Wall Street is a great one to start. The Little Book That Beats the Market by Joel Greenblatt, who we're actually inviting to our gala this year, is a great one to start. How Will You Measure Your Life is a great one for sort of choosing a career and choosing values. So yeah, those are some books. But I would just like to say thank you to Liz and Morgan. I don't know if you even appreciate how lucky you are. We have corporations that pay lots of money to have Morgan teach them about financial literacy, and we have lots of organizations that give hundreds of millions of dollars to Liz to invest and share her investment knowledge. So we're just so privileged to have both Morgan and Liz here with us today. It's what a privilege, what great role models. And basically, the stories, hearing it, you were not given this, like you earned it every step of the way. So amazing.
Yeah, I echo James's sentiments. Morgan and Liz, thank you so much for taking the time to talk to our students today. Loved having you. We will be recording this and putting it on our YouTube channel to be able to share it with the rest of our group. But thank you for your time today. And thanks to you guys for joining us for our first Fireside Chat. We hope to see you again in January. Bye, guys.
Thank you.
Thank you.
Thanks, everyone.
Thank you.
Thank you.